Welcome back, traders. This is Sandra with Trading Made Simple, and today we're going to talk about the homework you did for yesterday, maybe even yesterday afternoon. Why did it not work for this morning? And so that is our discussion. That research you did yesterday and you thought your swing trade was solidified, you wake up this morning, the market's racing up, and what do? If you're liking this content, please like, subscribe, and share. I really do appreciate your support. And let's get to it. So today, Alex contacted me in Discord and said, What? What in the world is going on? The market was falling. I did all this research on Apple. And I actually, without even getting into a conversation this morning, noticed all the searches about Apple and I saw this come up. And I thought, wow, isn't that interesting? What is this? What is this? So there's always something with technology, for goodness sake. Anyway, so I saw this pop up and I was like, look at all these whales. This is incredible. This is really, if you watch data flow, this was pretty eye-popping to me. So, here's the flow. Here's the flow. Look, the flow was kind of all in range, and all of a sudden this comes out this morning. It's like, what? What's going on? Well, somebody said, oh, I'm switching my position because the market switched its position. So if you didn't think that the institutions were switching their positions with their scalps and their intraday and swing trades, they are. They do. They actually have like such high tech bots that are making the switches for them. They don't even have to do it manually. They got it down to a science. So once they can identify a volume and that it's going in the opposite direction, they get out of their trades and go, all right, they just jump right back on the train track on the other side. That's it. We're right in that thing. And I'm sure that each one of us has been there. We've done our analysis. We're in a trade. We're watching it. We're like, holy moly, I got in. I got this wrong. So what do? Do you just walk away from the trade? Maybe sometimes, but sometimes I just go, oh, I got it wrong. I'm staying on this trade. I did all this work for it. I'm just going to go right on the other side and I'm going to jump on the track, man. Let's ride this thing a little bit. So that's exactly what they're doing. Don't even think about it. That's exactly what they're doing. So you did your homework yesterday. You wake up this morning, the market's changed. All of a sudden, you start looking at one of your favorite positions that you probably took on yesterday, and you see something like this. And that should be your first identifier that you need to make a decision about getting out of your trade. If not, then you just need to be willing to hold it for $4 or $5. Are you? I say no, don't marry your trade. Just date it and get out of it. If it treats you bad, can you come back, take her out again? If it starts to go in your direction, absolutely. So that's how I would say it. So this was one indication that, the trade had changed from yesterday. And then, if we go into our tools for data flow, you can actually see here that I was explaining. Well, you know what? Let me just go through a couple of them. I believe there was one over here. This morning I saw, while we were in discussion with it this afternoon, here was one that said, hey, within 1 to 2 days, this is going to happen. This is a bullseye trade alert for a swing, a 157.5. So that was completely different than yesterday's analysis. And then was there anything here? I'm not sure about I think I saw two or three others in our alerts. But anyway, oh, here it is. Here's one, 155 green. This is, a bullish trade in any event. So this is today. This is happening all today. You made your assessment. You got into your trade yesterday. And so my advice would be to get out of your trade unless you're willing to hold on for dear life. Because, SPY went up $5, $6 or whatever. Do you really want to hold on that long? I say get out, cut your loss, and then when this gets to resistance and starts turning around because we are in a downtrend. But could this change though? We're in quad witching right now. Friday's coming up. There's a lot of analysis out there that says that we're due for a little run here. So let's do it. But I guess that the point being that you just need to be very, very flexible with your trades while the VIX is over 20. So the VIX is a fear gauge, and the volatility is in both directions. So not just down, but also in up. Because when do you get to see? Let's go to SPY real quick. When do you get to see just SPY go up $9? Yeah, that doesn't happen all the time. Maybe 5 or 6 lately. That's a heck of a gain, man. That's a heck of a gain. But let's look at it, by the way, on a daily chart just real quick. So on a daily chart, we take a look at this. And, the thing that pops out to me, I don't know about you, the thing pops out to me is this engulfing candle right here in February. Wow. It's a huge candle here. That's not retail traders. That's institutional buyers coming in. So do you think that they're going to defend that area? They're going to defend this zone. They defended it over here, and apparently they defended it yesterday, didn't they? Because now here we are. We're up here. So this zone of contention right here is serious support. So we could go up because we have, we have some, I got the Darvis here, support right here, 441, 440. It's a zone. Don't marry the exact number, but it is a zone. And, we could go up a little farther. And remember that, when we're looking at this TTM LRC, I don't want to take away from it. The TTM LRC is a regression a regression channel. And it's the bell curve for whatever stock you're looking at. So 68% of the time when the stock moves, it will move between this one standard deviation to another. And if it moves beyond that one standard deviation, goes to the second line here in the sand, then 98% of the time it's going to reverse and come back to where? The mean. And the mean is the line in the middle. And I think you can actually program the colors of this. I don't know if I programmed the colors or if it came like this, but the mean is in the middle. So we came down to here. We went to the mean, right? So look at this while I just described what this regression channel is. So let me just show you how this looks. So we crossed just right below it. We went back to the mean. We almost touched it. We're back to the mean. You see how this goes? I don't want to make this very difficult. I want to make this as simple as possible. Could this continue up though? Are we due? Are we due to go up here and, maybe test this level of the 430 level? Absolutely. We're almost there. We're 426 for goodness sakes. We could do that on a daily chart. And then where would we go? Would we go to the top here or are we going to come back down? Well, we'll soon find out. But we got the momentum channel here that's, pointing in the upward direction towards the zero line. If we ever get past the zero line, especially on a daily chart, wow, that's positive. That's a lot of energy. In fact, on any chart that you're looking at, you could be trading a 15-minute chart as an example. So if you were trading a 15-minute chart as an example, we ended today on a high note, which by the way is positive. But as you look at my pivot wedge here, we're at the top of the channel here. So that'll be interesting. So we're leveling out here a little bit, but we could still go up there. And where is that? That's so funny. So that is in the 430 range. By the way, this is the script that I've been giving you the last couple videos, which is the pivot trend line. It just automatically draws it. And this is your pivot. So, those things actually work for your support and resistance. So if you ever have any questions, just email me. You can go to our Discord, and we have a Discord channel, Trading Made Simple. And you can come check out our services there as well as tradingmadesimple.org or G. I'm sure that you will remember it. So, I'm certainly hoping that from, our discussion here today is that when the VIX is over 20, you're not going to marry your decision, and you need to react just like a computer would, identifying the flow and the volume coming into the market. And if it's going in the opposite direction, you better jump the ship that you're on and get on the winning train, because that's what it's all about. We'll see you in the next video. Hi, this is Sandra with Trading Made Simple, and I hope you liked today's video. If you need some help with trade education, strategies, or trade automation, come over to tradingmadesimple.org. We have free education as well as premium services, and I'll see you on the next video.